Hi, I'm Don Simmons, and today I want to talk about real estate with an eternal impact. What if the field you sell today could plant seeds of eternal treasure tomorrow? In Matthew 13:44, Jesus says, "The kingdom of heaven is like treasure hidden in a field, which a man found and covered up. Then, in his joy, he goes and sells all that he has and buys that field." The story is simple, but the wisdom is profound. The man recognizes extraordinary value and acts decisively, trading what he has for something far greater. That same principle can apply to the way that we think about real estate stewardship. Many investors hold highly appreciated properties that have served them well over decades. But now come the burdens: active management, capital gain taxes, and limited flexibility. A 1031 DST, Delaware Statutory Trust, exchange offers a modern tool to align those assets with both wise financial strategy and kingdom-minded purpose. Under IRS Section 1031, property owners can defer capital gains tax by exchanging a relinquished property for a like-kind asset. With a DST, the exchange is into a professionally managed portfolio of institutional-grade real estate. Instead of managing tenants, repairs, or leases, the investor enjoys passive income and diversification while still deferring taxes. So here are 5 potential reasons to consider a 1031 DST exchange. First, a 1031 DST exchange lets you defer capital gains taxes, keeping more of your investments working for you. Second, it offers built-in diversification by spreading your investment across multiple properties and markets, potentially reducing risk of any one tenant or market. Third, you can enjoy passive income without the hassles of property management. Fourth, it opens the door to align your investment with kingdom purpose, supporting redemptive real estate projects that reflect your faith. And fifth, it simplifies charitable giving and estate planning, making it easier for ministries or donor-advised funds to receive your legacy. Now, to be fair and balanced, it's important to note some of the risks and limitations of a 1031 DST exchange and why it may not suit every investor. DSTs are generally illiquid, meaning your funds are tied up for the life of the investment and can't be easily accessed or sold. Investors relinquish control, and all decisions about the properties are made by the sponsor, so poor management or overly optimistic assumptions could negatively impact your returns. Further, market risks still apply, including property value fluctuations, economic downturns, and tenant instability. And finally, the tax rules surrounding 1031 exchanges are complex, and mistakes in timing or structure could trigger unintended tax consequences. So just like the man in Jesus' parable, a 1031 DST strategy invites you to sell a familiar field, not out of loss, but out of joyful expectation for something richer. For the kingdom-minded investor, this is about more than financial gain. It's about faithful transition. It's about stewarding assets in ways that reflect God's purposes and multiply their eternal reach. As you consider your next move, remember, wise investments isn't just about building wealth, it's about building the kind of legacy that will echo into eternity. While a 1031 DST may be helpful in some scenarios, it's not a one-size-fits-all solution. I recommend consulting a qualified financial advisor or tax professional to ensure that this strategy aligns with your personal goals and your stewardship values. In the words of Brian Fickert, co-author of When Helping Hurts, real estate is not just about buildings, it's about shaping neighborhoods, restoring dignity, and giving people a place to belong. If you like this video, click subscribe and be sure to forward it to a friend.